I'm Ken Silberling. I'm a commercial real estate broker in South Florida and author of the award-winning KensTrends blog. I've decided that to be productive during this downtime, I'd learn how to put my blog on video. For April 2020, to take your mind off of the coronavirus, I'm going to discuss a change to your commercial real estate dictionary. CBD has always been one of the most commonly used terms in commercial real estate, but I'm sure that you've seen that the definition of CBD has changed. I started my career in market research, and that's where I first came across statistics for the CBD and the non-CBD market. CBD, or Central Business District, was a more impressive way to say downtown, and non-CBD referred to suburban. But today, CBD is affecting the commercial real estate market in a different way. CBD also stands for cannabidiol, which according to the Harvard Medical School is the second most prevalent chemical in the cannabis sativa plant. You may know it better as the hemp plant or the marijuana plant. THC, tetrahydrocannabinol, is quite a mouthful, and it is the better known chemical which produces what we call the psychoactive effect or high. But I'm sure you're seeing more and more CBD products in stores and in ads. Medicinal marijuana is now legal in Florida, and the legalization of recreational use can't be too far behind. Anyway, both CBD and THC are extracted from the hemp plant. Hemp fibers have been used for centuries to make rope, paper, and even clothing. Thomas Jefferson actually drafted the Declaration of Independence on hemp paper. But you've only been able to grow industrial hemp legally in the US since 2018. For hemp to be legal, it has to have a THC content of less than 0.3%. It's only when the hemp is specifically grown to produce flowers with THC content in the 20 to 30% range that legality begins to come into question. We've heard claims that CBD helps with pain, inflammation, anxiety, and insomnia, but these have yet to be medically proven. But the FDA has approved a CBD product to reduce epileptic seizures among children. The explosion of new CBD and cannabis businesses is having a major effect on the commercial real estate market. CBD sales, which totaled $500 million in 2018, are expected to triple to $1.5 billion in 2022. Legal sales of cannabis worldwide are expected to increase by 853% to $104 billion between 2018 and 2027. As brokers, we are all getting calls from CBD and cannabis-related business owners. Currently, 11 states have legalized recreational marijuana, and 22 have approved it for medical use. But cannabis is still illegal according to federal law. So dispensaries and grow houses generally pay what's called a cannabis premium, as landlords charge higher rents based on the risk of government intervention. In Colorado, the first state to legalize recreational cannabis in 2014, growers have paid 2 to 3 times market rent for industrial property, and the increasing demand has raised prices across the board. Denver industrial rates increased by 10 to 15% annually between 2012 and 2016. If there's money to be made, you know Wall Street is going to get involved. There are now actually cannabis real estate investment trusts that invest in retail and industrial property leased to the cannabis industry. You can get in on the trend by investing in companies like Treehouse REIT and Innovative Industrial Properties Inc., which aim to generate higher returns than traditional REITs by investing in properties leased to cannabis-related tenants. There are now many publicly traded cannabis businesses with market caps in the billions. The takeaways? Whether you're a real estate analyst or a consumer, look out for CBD's new double meaning. Whether it's CBD or CBD, both will continue to impact commercial real estate. But I think we can be certain that non-CBD will continue to refer to the suburban markets rather than THC. I hope you enjoyed the video version of Ken's Trends. You can go to kenstrends.com to read my earlier content, including Ken's Classics, where I revisit some of my favorites. I may start putting more of them on video, as I think this YouTube thing may just catch on.